you'll also note that when we talked about this, development here with the on below the low of that trading range when you put it right in here. So what does that tell you? We've broken through that first 2-week period, and so that would suggest that the euro situation looks pretty weak. That doesn't guarantee that it'll be weak, that it'll go on forever, but it could be pretty weak. Now what would we do with that information if we were combining that and if we felt that we had a trading situation here? Well, actually, if you were looking at the vantage point charts, you kind of knew that already, because you had a situation here where you had a breakout right here, and depending upon the criteria you want to use as to how far you want to go below the predicted low as to where you want to enter a trade, you potentially could be on board this trend from almost near the top. Again, the situation, it kind of unfolded over time. It has dropped. You have a position, a short position in this case, and you want to keep your stop above the predicted highs and move your stop down, kind of an effect like as a trailing stop to move your stop down if that were the type of trading you like to do. Now sometimes the January range, typically you like to have your, have one act as a stop if you go above the predicted high and or as a stop below the predicted low, but that range may be too wide, maybe too risky. So you need to find some other tool, and a tool like Vantage Point might be that kind of tool that can help you refine what you're trying to do. Now currently you want to note probably that we are at a situation here with the predicted differences where the medium term predicted difference has turned up and it has crossed the predicted momentum shifting, and at least for a short-term bounce. Again, no guarantee that there will be that bounce, but it's something that traders need to be alerted to as, and be prepared for that potential to happen. Okay, now we're going to, let's see, we're going to switch back to our Vantage Point screen. We want to go through several other charts and take a look at what is going on with, on the other charts with Vantage Point. I'm going to talk a little bit about the U.S. dollar. U.S. dollar is kind of the opposite of that. And when we're going to go back to the U.S. dollar and take a look at that, and you can see kind of the opposite type of a situation. I'm just going to throw up a couple of little indicators here and kind of follow along. This is a little bit of a longer term chart, that we have up here right now, but we're going to add these indicators and show you what has happened to the dollar and its bottoming effect. Cut it back to 3 months, and you can see where there are some opportunities here where you might want to be able to trade also. Particularly you note that there has, in this predicted difference situation here, where the blue line has crossed above the green line, the medium term, that is, above the long term, indicating momentum is starting to pick up and on the rise. You'll note above at the candle has broken well above the predicted next day high, and if you are keeping a stop below the predicted next day low throughout this whole run here, you have a potentially really nice trade on the long side that you're profiting from. The same thing is also true. You get through this little sideward period here, there could be some smaller trades in here, but then you have the same type of breakout over situation over here where you have the predicted differences turning up, and you have the candle up above the predicted next day high, and at this point you would be riding the market up to the higher points up here. Now, when you look at the time frame that we were talking about before, we were talking about the 2-week period of the high. We would be going from roughly this period right in here, December 22nd, all the way from there, all the way through this period about, let's see here, let me find January 15th. And I think that's about where we're at right there. Nope, too high. Okay. Getting the bulky. That's your period that we're looking at there for the 2-week period. And so if the market were to break below about 76, 74, believe it has already gone above that high for that period at 78.77, and it has continued to exceed that as recently as yesterday. So that market is apparently looking like it's going to be a stronger market in 2010, which would be the opposite of the case last year. Okay, let's look at a couple other markets quickly just to kind of get an idea of what's going on there. This is crude oil. Again, we're talking about a crude oil market, which is kind of a key market for a lot of different markets, a lot of different things that depend upon the crude oil market related to the economy and other things that are happening, politically in the world. We're going to do, again, just toss on the high-low price. We're going to toss on the predicted medium-term and long-term differences to get a feel for what that looks like. We're going to cut our time frame down here to 3 months to make it look a little better for analyzing. And again, you see we have the predicted difference crossovers turning up, moving up, and then you have the candles going above the predicted next day high, that gold line there, and you could see the run up, a nice run up in oil prices. When you see the price penetrate the predicted low, the pink line, as it does on this candle here where you can see my cursor, then you have a situation where you get out of the market and potentially go short, depending on whether you want to be a stop and reverse type person, or if you want to just trade, just one position at a time or one direction at a time and get back in on a later signal. In crude oil, the high was for the January that we're talking about here, the January high, 83.95. So if it breaks above that, that's the indication that we're trending higher, or that we have good prospects for a nice run up in the price of crude oil. The low 72.43 for January, which would suggest that a breakout of that particular area, which occurred fairly late in the month, is prospects for a weaker oil situation. As you know, in last day or so that we have started to break back up, and so that may be an indication of a stronger market. Looking at soybeans, I have a year-long chart here to look at, particularly because I want to point out a couple of things that are on this chart. First, the lows. You have the lows here, and there's one low. Over here, there's a double low. You have lows at approximately 8.88. Those are one of those things you want to watch, and this applies not just to Vantage Point, but also to more of the typical traditional technical analysis types of things. When prices get near a low or whatever, there's likely to be some kind of a reaction. We have a little switch. We're going to again switch over here and take a little look at this and try to talk about it. A couple of points on here as the things that we can look for. Okay.